Hey everyone, welcome along to another video from Victory Trading. This is a video about how to scalp the gold pair, gold USD, on a 5-minute chart using a MACD indicator for entries and exits. Okay, again, it's a scalping strategy. So we're going to be taking small trades in and out quickly. And the beauty of the 5-minute chart, we get plenty of opportunities, plenty of signals. They come up quite often, and all you have to do is decide whether to take them or not. Okay, so it's quite simple, it's quite straightforward. I'll run you through it very quickly, and we have a potential setup coming up here in the next candle or two, which is great. So hopefully we get the entry so I can show you. So all we're doing here is waiting for a MACD cross, which you can see an example here where the crosshair is right now. So you can see the gray lines on the MACD crossed to the downside, crossed through the red line, while the MACD is above the zero level. So that gives us a sell signal. Okay, when the MACD is above the zero, we're looking for sells. When it's below the zero, like it is right now, we're looking for buys. Okay, again, what is the signal itself? It's just a cross of the red line by the gray lines. Okay, so you can see one is potentially panning out right here, which is why I decided to throw a quick video together for you. I've had some good success with this strategy on this pair and this time frame lately. And it's just so simple and straightforward, so I just thought I would share it with you. So basically I'm just waiting now for this histogram, the gray lines, to curl upwards and cross the red line. You can see they're actually meeting right now at the moment, and we have a green candle, so most likely on the next candle we'll be crossing the red line, which will be our entry signal. So I'll keep an eye on it here, and we'll see how it pans out. So in the meantime, have a look over here. This is a good example. This is what we're waiting for right here. Cross of the gray lines to the upside through the red line. That was a buy here, which I took. Okay. Then we had a sell here. Again, cross of the gray lines to the downside. Took a sell here. Two nice trades. Handy scalps. About, I believe I got about 12 pips each on the two of those trades. Okay, so let's keep an eye on this and see if we cross to the upside again, which I would say we will, given the size of the current green candle. So we'll check back in a moment and see if we get the signal or not. Okay. And here we are, guys, just a moment later. Again, it's a 5-minute chart, so you do get these signals quite often. But you can see now we have a cross of the histogram to the upside through the red line. Okay, that is officially a buy signal with this simple, straightforward scalping strategy. Okay, so I'm going to go ahead and take the buy trade now. I will put the trade in and come back to you in a second with the trade lines on the chart, just to talk about the targets and stop loss. Okay guys, we're in the trade now. You can see the buy trade there, the blue line, and you can see we're now currently in the trade. You can't see the stop loss level or the take profit level just because I'm zoomed in so much, but I'm just going to switch it to a 15-minute chart just to show you where they are. There they are. Okay, the stop loss here is 30 pips below the entry, and the take profit target is 60 pips above the entry. So it's a 2-to-1 ratio. Again, stop loss 30 pips below, take profit 60 pips above. Okay, that's what I set as my levels, and if they hit either, I'm happy enough with that. In the meantime, what I'm doing is keeping an eye on the MACD itself, and using that as a gauge or a way to possibly get out. Okay, so again, I have my take profit 60 pips above, but I don't necessarily want to hit that. That's just there for kind of I guess a guarantee or insurance. If it goes up that high, I'm more than happy with that to get out. However, when the MACD comes back across the zero level, that's when I'm looking at really keeping a close eye on the price action, and I'll be closing out at some time when it comes back above the zero level. Okay, again, I'll show you as it happens, as it pans out here, so you can make more sense, but it's kind of discretionary from here. You can keep an eye on the MACD and the price action and choose when to get out. Okay, so we'll keep an eye on it and see how it goes. Okay guys, we're currently sitting around 15 pips above our entry. So around 15 pips profit at the moment. So this is a good example of how this works and the possibilities. So the important thing to look at here, okay, so have a look down towards the MACD now. So remember, we took the trade when the histogram or the grey lines passed to the upside. However, the MACD is now back at the zero level. So it's now going from being below the zero level to being at the zero level, maybe above the zero level as well. So I just wanted to highlight, this is where you need to start paying close attention. When it crosses the zero, that's your cue to start looking at getting out basically. It doesn't mean you have to get out straight away when it crosses the zero, but you should be monitoring it to see are the grey bars still going upwards, or are they starting to level out or even go back the other way. We'll use this previous example over here just to explain it a bit more. You can see here it came up to the zero level. Okay, so at this point here, we're keeping a close eye. The next few grey bars are going up, 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 so we're safe enough to hold on to our trade and stay in. Try and squeeze a few more pips out of it. Again, we've got more bars to the upside, that's fine. We're still keeping with it for the moment. Then you can see we had one bar which was lower than the previous bar. Okay, so when the grey lines start to kind of top out and head back the other way, that's your signal to get out. Okay, again, that's a good example here. So we monitored the grey lines coming upwards. We're still moving up. The MACD is still going upwards, upwards, upwards. So we're safe enough until this point here, where we saw one bar was lower than the previous one, and then the next bar was lower again. You definitely want to be out by there. Okay, so again, just as I'm talking here, you can see we've crossed the zero level. So now we're keeping an eye to watch for when these grey lines stop moving in an upward direction and start moving in a downward direction. If we hit the take profit in the meantime, that's brilliant, happy days. If not, we'll get out when the MACD starts to slow down or turn in the other direction. Okay, so we'll check back in a few minutes, see how we go. Okay guys, currently sitting at about 21 pips above the entry, I believe, and we've had 5 bars now. You can see here these grey bars on the MACD, which are above the zero. We've had 5 bars above the zero. They're still slanting upwards, which means we're okay to still stay in the trade. Right now, I'm waiting for an exit signal on the MACD, which is going to be these bars stopping going upwards. Just like I described over here, you can see we had one bar that was below the previous bar, and then another bar after that one which was below that one again. Okay, so there's a new bar, still sloping upwards, still happy enough to stay in. Squeeze a few more pips. Okay guys, currently sitting at around 17 pips profit. have a look at the MACD now. We can see that the grey lines have stopped going upwards. They've stopped ascending, starting to flatten out and very slightly just going down a little bit, descending very slightly. So that's a perfect time to get out with our 17 pips profit. And that's it. That's how I trade this strategy. So just let me close the trade and come back to you before we finish up the video. And we're out of the trade now. That was a winning trade with 18 or 19 pips in the end. Okay, so that's it for this video, guys. I hope you enjoyed it. I hope you get some value from it. Again, just to run through it very briefly, we're looking for a MACD cross, the histogram crossing the red line. If we're looking for a buy, the MACD has to be below the 0, crossing to the upside. That's a buy signal. And then the opposite is true for a sell signal when the MACD is above the 0 and crossing to the downside. Okay, my personal stop loss and take profit is 30 pip stop, 60 pip take profit. But I get out when I get the MACD slowing down or turning around. Okay, so stay tuned. If you'd like to find out more about the strategy and a bit more information, I'm going to do a part 2 video which is going to cover a different situation which you can see unfolded just here a few hours ago. So in this one here we had 2 buy signals. Okay, so you may be wondering what happens in that case. And here you can see we have 2 sell signals. Okay, remember when it's above the 0, it gives us sell signals. When it's below the 0, it gives us buy signals. So I'll cover that in the next video. Do keep an eye on the channel if you'd like to find out what to do in that situation. Let me know in the comments what you think. Have you tried this before? Did you have any success with it? Do you like it? Do you not like it? Any suggestions, comments, or anything at all? Let me know down below. Okay, thanks for watching, guys. Best of luck in the markets and take care.